The latest earnings results from retailers giving us that inside look into the state of the consumer. So let's break down some key takeaways, starting with the state of department stores. So we heard from Macys earlier this week. This is one of our big takeaways that we have been tracking throughout this earnings season, and especially with retailers. And Macys particularly came to mind here because of some of the weakness. Morningstar equity analyst David Schwartz joined us this week, and he said, at this point, it's hard to have a lot of confidence at all on Macys' turnaround plan, and it's a massive turnaround plan. Layoffs, restructuring plan, and then additionally closing 150 stores. This is just the start of Tony Spring's tenure over at Macys.
It certainly is, and I think it highlights some of the struggles that we're seeing play out beyond Macys into other parts within the sector. We've talked for a long time about Nordstrom, the fact that that company's struggling. When you take a look at Kohl's, so many of these larger players within the department store space, they're trying to right-size the ship right now, trying to adjust their business for what the consumer wants and needs at this point. A lot of that means more heavily investing in online. When you take a look at rivals, obviously Walmart and Amazon, that was one of the strategic moves laid out from Macys' new CEO, Tony Spring, just in terms of some of the investment there and what they plan to do in fulfillment centers. So until that transition takes place, you can expect some of these department store names to remain under pressure. The second trend that we want to point out here when it comes to the consumer and really giving us a good look as to how shoppers are feeling right now is the rise and popularity of the private label products. Now, this is a trend that we have been talking about now over the last couple of quarters, and it is continuing here into this quarter. Even just earlier this week, Target coming out announcing a brand new private label line that most of their products are going to be in the range of $1 to $10. And why we're pointing this out is because, yes, inflationary pressures have eased just a bit, but still clearly shoppers are feeling the pain of higher prices, and they're forced to make some of these adjustments as a result.
And that's all part of the value consciousness that a lot of shoppers are deploying right now. And when you think about some of those private label brands and the broader kind of play into that trade down type of mindset, that's exactly where companies like Target, I should say, or Target, and then additionally Walmart, where we've heard them continue to lean into some of those brands that are homegrown. Finally here, though, we got to talk about a little bit of luxury. It's a little luxury, though. Just very little. And it comes out in a couple different formats here, particularly in that beauty category, the cosmetics category as well. And I'll harken back to Macys just once again, because that was one of the bright spots actually of their report. Blue Mercury, one bright spot in the Macys earnings this week, poised for acceleration, the CEO said. Over the next 3 years as well, they're anticipating about 30 Blue Mercury store openings, remodel roughly 30 others as well. And then you think about where else this has played out within the little luxuries landscape. It's ELF, everyone. And that ticker symbol has been rocketing over the past year, up 170%, 44% higher year to date. They reported earnings, they raised guidance. They also have 3 consecutive periods of doing so here. So that's another name that's been on the minds of a lot of analysts out there.
Yeah, and TJX was one of the companies that was out before the bell this morning, and they are seeing spending on some of the cosmetics, those types of purchases that really have outperformed over the last couple of quarters. And you've got a lot of people asking whether or not the beauty industry is relatively recession-proof when you compare it to some of the spending trends that we've seen more broadly within the sector.